Welcome back to Hot Stoxx. We now turn our attention to the JD Group. Of course, a market cap of 6.8 billion rand, a PE of 10.8, and a dividend yield of 4.5%. Chris, I know that this is actually one of your favorite stocks. Tell us why.
It has been. I've followed this thing for over 20 years. It's been out of favor, I think, for quite some time. I think a lot of people perhaps don't quite trust it. They look at it and think, you know what? There are too many unknowns in here. One of which is the recent explanation that they're going to actually have a car rental business on a four-year term, and they're looking for low entry-level vehicles, and it's not going to be a lease in terms of the Consumer Protection Act, this type of thing. It's going to be a pure rental. That to me looks very, very good. I think it's very innovative and very, very clever. If you look at what's happening on the relationship with Steinhoff,
because they're getting Unitrans Motive, I think, for 3 billion rand.
That's the one. Yeah. If you look at what's happening on the home, not home improvement, but the kind of the home retail group type of equivalent with Steinhoff, the Conforama type of stuff, we're going to see a whole bunch of new stores opening up on that front as well. Again, I think demonstrating a large degree of innovation in this company. The basic businesses are back to normal, if you like. Although it's in the same space as Lewis, they operate very, very differently. So I just like the look of this thing, and I think the earnings are going to come through in the not too distant future. And the market doesn't like it. It refuses to let it go much above the 40 rand level.
Johnny, when you look at consumer confidence numbers here in South Africa, they're looking very dire at this stage. We've got interest rates sitting at 30-year lows, and we know that JD Group, although quite diversified, it still hinges a lot on the health of the consumer. Is there a concern for you going forward that, yes, JD Group has actually done quite well over the past few months, but it could actually be heading towards some challenging times?
Look, I mean, we generally think most of the retailers will face sort of increasing headwinds going forward. Some of them have had the wind at their backs for some time. I guess our concern with JD Group would actually be the Unitrans transaction. I think in the absence of that, at 40 rand, we would be quite excited. We think the furniture business has bottomed and could show some nice growth from here. We're not convinced they got Unitrans for a good price. They may struggle to integrate that as well. We talked about integrating acquisitions prior to the break.
Yeah.
And on the rental product, again, they effectively are being very innovative to try to get around the NCA. But we actually have to ask ourselves whether the regulator actually wants people to get around the NCA, or whether the NCA needs to be rewritten to try and capture some of these products.
So no loopholes. What about Steinbuild? We know that it's a building materials DIY kind of space, and we know that through some of the numbers that we've actually seen in the market, still not looking very good. We might just see an uptick. 169 million rand that they paid for that. Johnny.
I mean, Steinbuild was quite small. They effectively swapped their Polish business Abra for Steinbuild. Steinbuild, I think, is at the bottom of the cycle. Maybe things deteriorate for another 6 or 12 months, but that business they've probably bought near the bottom of the cycle. So they'll probably make reasonably good returns on that. But the crux of the matter is Unitrans. That's the 3 billion rand acquisition, and how that actually plays out in the next 18 months or so.
I see you agreeing there. Chris,
yeah, look, I mean,
Steinbuild. Give me your thoughts.
Steinbuild is relatively small, but talking to David Sussman some months ago when this first came out, I think they're going to streamline this business as well. If you look at things like Timber City and Penny Pinchers, they've been all right, but I think you're going to see a bit of a credit offering coming in there now. Let's understand something here. Their consumer finance business needs a lot more business. It needs to gear up significantly. And the Unitrans side of things is going to help it, and so is Steinbuild, because it's got a very lazy balance sheet as far as that side of it is concerned.
Oh, and we know that they've exited Boland, and we know that's also been taken quite well by the market. Percentage of revenues and the breakup there, traditional retail making up 40%, cash retail 33%, financial services 22%, international about 5%. Would you like to see a greater mix there, Chris?
No, I think that's actually looking reasonable. Okay, look, the international side's going, obviously, as John was saying, that Abra's gone. But I mean, even on the cash front, I think with a revamped Hi-Fi Corporation, that's going to come to the fore as well. I think the mix they've got is actually very, very nice indeed. and extremely well run by people who are dyed-in-the-wool retailers. They understand the business.
Hot or not for you?
No, we like the stock. It's very
No,
hot.
you like the stock. Allocating new money.
We're certainly looking at it. Yep.
You're looking at it,
Yep.
even during these tough, volatile times,
Yep.
Chris. Okay. And for you, Johnny, hot or not on JD Group?
No, as I mentioned, I think in the absence of a Steinhoff transaction, we would have been keen at 40. At this stage, I'll wait for the results, which should be out in October, November.
Of course, later on this year. Time now for our guest hot stock picks. And Johnny, we started with you. Yours is Old Mutual. Let's delve into why.
Yeah, I guess we're talking about MMI a bit earlier. Trading at about a 15% discount to embedded value. Mutual a much higher beta play, so there's probably a bit more risk there. But I think you're getting fairly compensated for it, trading at a 40% discount to its embedded value. If we talked about Momentum Investments, they only make about 100 million rand of profits before tax. Something like Old Mutual's asset manager in South Africa makes about 1 billion, and the market seems to be paying lower multiples for Mutual than it is for MMI and some of the other domestic players at the moment. Obviously, there's a lot of risk in Europe at the moment, but Mutual has very little direct exposure, if any, to peripheral European debt.
Yeah. So, Johnny, do you think that Nedbank is one of its weaknesses? Because it has been touted as one of the weaknesses for Old Mutual.
Look, I think Old Mutual's had a challenging sort of last 4 years. Part of that has been Nedbank, but most of their problems have been their own doing in terms of the US life business and the Bermuda business, which cost them quite a lot of money during the global financial crisis in 2008.
So allocating new money then, Johnny, on to Old Mutual?
We would be at these levels, yes.
Okay, so for you, Chris, would you be looking at Old Mutual?
No, and again, I think it comes back to what I said, with relation to MMI. Life assurers are just not businesses that we're going to be putting into our portfolios anytime soon.
But a business that you do look at, and time for Chris Gilmour's hot stock pick, City Lodge. You think it's hot during these times, and I think many would be quite averse to this share, given the fact that it is in the doldrums right now.
Yeah.
Is this the bottom, in other words?
Well, that's what I'm saying. I think it's a very unloved stock at this point in time. And, nothing has changed in terms of the way this company is run. It's still an incredibly well-managed operation. I think, unfortunately, along with many other hotel operators, they got, I don't want to sound derogatory, but they perhaps got suckered into building too many hotel rooms.
Exactly. Increasing capacity, and we've actually seen occupancy rates dropping to 56% or so in some cases.
Yeah, which is well down from the close on 80%, which we saw a couple of years ago. Those days will come back, I don't have any doubt about it. The problem was that the number of people who physically came and came into hotels, I'm not talking about your African land arrivals, which tended to swell the numbers, but the people who came and stayed at hotels were way short of what was expected. So what they put in, what the other hotel operators put in, was too much. So there's an overflow. This happened about 10, 11, 12 years ago when you got a lot of other operators, foreign operators coming in, putting up hotels like Hilton and Hyatt, for example, back in the early part of the last decade. But they survived, they came through it. And I think history shows us that when you get a big international event like the Olympics or the World Cup, the big payoff comes in the years after the World Cup itself, not in the year in which it happens.
Do you think they should just delve into other economies, other geographies? I know there was talk about India at one stage.
Look, I wouldn't get into India. I think the rest of Africa has got huge potential because anyone who's gone up there and sees the kind of accommodation you get, it's very, very expensive, not especially good, huge margins, and they have been looking at it for quite some time.
When was the last time you bought some City Lodge shares?
Well, it's one we're looking at very closely.
You haven't bought as yet, but it is your hot stock pick.
It's looking good. In our
Okay, and Johnny, what is your sense on City Lodge? One of the smallest stocks, but a compelling argument by Christopher Gilmour.
No, I mean, I would agree with Chris. I look at some of the gaming stocks, and they also have hotels. It is cyclical. The cycle will actually turn, but it could take some time for the excess capacity that was built up pre the World Cup to actually be worked out of the system. And I guess the one concern will also just be pricing power of hotels, which has been quite weak of late. So at the moment, we would be steering clear of City Lodge.
Steering clear, so not hot for you. Okay, Johnny, let me ask you this. Overall, when you look at the market performance, we've had a couple of days of positivity. Again, Eurozone under the spotlight. Are you exercising caution, or do you find opportunity in the time of volatility?
Look, we're generally still cautious on the market, both within our asset allocation funds, as well as then within equities. We would be looking for sort of slightly more conservative defensive stocks. The volatility that we saw end of July, beginning of August, did allow us to sort of pick up some stocks which were beaten down. But generally, we still think there are quite a lot of headwinds for the market, not least being Greece trying to get the third drawdown of their sort of stability pack from the EU and the IMF.
Chris, and I know you're always cheerful, but I don't know if that means that you're quite optimistic about the future and how the market has been performing. What is your sense?
Look, I think the market's going to do very little, if anything, in terms of an actual trend for the next 3 to 6 months, maybe even longer. While we have the kind of factors that Johnny's been talking about, the problems in the US and more critically, the problems in the Eurozone, and they're not going away anytime soon.
Yeah.
Unless and until they are resolved to everyone's satisfaction, we're going to have pretty choppy markets where a trader's delight, but from a long-term investor's perspective, not satisfying.
And quite tiring, I'm sure.
Yes, very tiring.
Gentlemen, thank you. We have to leave it there. Great to have you on the program.